Welcome to another episode of Wealth Uncensored. Today I'm going to talk about multinational estate planning. Now, when we talk about multinational estate planning, what does that actually mean, right? Well, to a lot of people it means you have assets in different countries. To other people it means your family has varying citizenships or residencies. Welcome to the Wealth Uncensored podcast. Straight talk about everything that impacts your wealth. In each episode, I share what I've learned through my own experience and 2 decades of helping high net worth clients structure their affairs to minimize taxes and protect their assets for the next generation. I'll also feature special guests who are experts in their own field, sharing their knowledge and experience to help you protect what's yours. I'm your host, Jimmy Sexton. Let's dive into today's show. Multinational estate planning basically encompasses all that stuff, right? So multinational estate planning encompasses somebody who needs to do their estate planning and they have assets in multiple jurisdictions. Maybe their family has people with dual citizenship or multiple citizenships or varying citizenships and varying residencies, right? Maybe they have family members all over the world living in different countries. Well, this makes things fairly complex, right? Because when you start to engage in the estate planning, you not only need to consider your own citizenship and your own residency, but you have to consider the citizenship and residency of your heirs. And you have to consider the location of the assets that you want to do the estate planning for, because each one of those assets, if they're in a different country, are going to be subject to a different legal and tax regime. Just like if you have heirs that are citizens and residents of varying countries, each one of those countries of which they're a citizen and a resident is going to apply a different set of tax rules and legal requirements, all of which need to be considered when engaging in estate planning. Now, one of the things that I've realized in my 20 years of doing this is that, there's a lot of people out there that are advertising, set up a Cook Islands trust, or you set up a Cayman Islands trust, or set up a foundation over here or whatever, and that this is sort of the solution to all the problems. Well, it's not. Unfortunately, most of the people that are out there claiming to be doing estate planning and advisory work are in reality just entity salesmen, right? They live in one jurisdiction. The way they make their money is by selling a structure in that jurisdiction. So obviously, they're going to claim that that jurisdiction is the end-all, be-all of estate planning and can accomplish everything. But that's not the case. You can't say from the beginning of an estate planning case that this is the jurisdiction. You have to dive into where are the assets located, where are the people citizens, where are they residents. You have to look at all of this stuff and then sort of back your way into what the right jurisdiction or jurisdictions are for the structure that's going to be put in place to accomplish the estate planning. I think that's a big red flag. If somebody's trying to sell you a structure or an entity like a trust or a foundation in certain jurisdictions saying this is the best thing for you, you can be pretty sure that this person is not a high-level advisor, because they need to know the facts and circumstances of your case before they can advise you on what the right jurisdiction is going to be and what the right structure is going to be. Just keep in mind that a lot of people out there aren't real advisors. Some of them are just entity salesmen, right? They make their money selling trusts, or they make their money selling foundations or companies or whatever. They don't make their money on the planning. They make their money on selling entities, right? So be aware of entity salesmen. The second thing you need to be aware of is what I call single jurisdiction advisors. They're experts on the laws of a single jurisdiction, and they try to make the structures available in that jurisdiction and the planning opportunities available in that jurisdiction sort of fit for every client, because that is how they make their money. But when you really dive into multinational estate planning, as I said before, we need to think about the jurisdiction of where every single asset is located. We need to think about the different countries where the heirs are citizens and residents of. Let's say, for example, that you have an asset in France and you're a citizen of Germany and you live in Italy. What happens when you want to transfer an asset into your trust or foundation. We need to look at where the asset is located, right? So let's say that asset's located in Germany. Well, how is Germany going to tax the transfer of that asset into a trust or foundation? Is it going to be considered a gift? Could there be a gift tax? Could it be considered a gain recognition event where there's going to be a capital gain? Or is the transfer going to be disregarded and completely tax-free? So we need to make that determination where the asset is located. Then we also need to do that very same analysis in your country of citizenship. Is your country of citizenship going to tax the transfer of this asset into whatever structure we're putting it in, right? And again, it's the same question. Is there going to be some sort of a transfer tax, a gift tax? Is it going to trigger a capital gain? I mean, these are all things that we need to think about. And then that same analysis goes for your country of residency, right? I mean, how are they going to tax this transfer? Is it going to be a disregarded transfer? Is it going to trigger a capital gain? Is there going to be gift tax, some sort of transfer tax? And then what happens once the asset is in whatever structure you transferred it into, right? Some countries, for example, view foundations as separate legal entities, and once the asset's transferred into that, any income that's generated by that asset within the foundation is going to be taxed to the foundation and not the person that transferred into the foundation. Trusts might be a little different, right? Some countries disregard trusts altogether, so you might not have a big tax liability putting an asset into the trust, but you might continue to be taxed on the income generated by that asset as if you continue to own it, even though it's now owned by this trust, right? So we need to look at what are the tax consequences of placing this asset into the structure. Are there any? Then we need to look at how is the income that this asset generates going to be taxed once it's in the structure? Is the structure going to pay the tax? Are you going to continue to have to pay the tax? And how are different potential structures going to change that tax treatment? So, for example, with a foundation, maybe you have a situation where there is some sort of a tax recognition event or some sort of tax liability when you transfer the asset into the foundation, but after that, the foundation's liable for any income tax on the income generated. Whereas sometimes with a trust, maybe we have no tax when we transfer the asset into the trust, but the trust is not responsible for the tax on the income generated. You are personally, because the transfer was potentially disregarded or something like that. So these are some of the things that we need to look at. Then we also need to look at how are the beneficiaries going to be taxed on this? Is being a beneficiary of this trust or foundation, is their country of citizenship or residency going to look at their beneficial interest as an asset that might be subject to a wealth tax, for example? How are distributions from the trust or foundation going to be taxed in their country of citizenship or residency? Are they going to somehow be taxed on income that's generated by the trust or foundation, even if they don't get it? Or are they only going to be taxed when they get an actual distribution? And then how is that distribution going to be taxed? And then on top of that, what are the reporting requirements going to be? Let's say you have a UAE foundation. We want to put a piece of property in Italy in. We need to look at how the UAE is going to tax any potential income that is generated by this trust or foundation. But we also need to look at how this is going to work in Italy. Because if it's going to own property in Italy, for example, maybe this trust or foundation needs to go through some type of registration process in Italy so that it's allowed to own property there. And if that property is generating income, then who's going to be paying that tax in Italy? Is it going to be the trust or foundation? If so, it's going to have to register as a taxpayer in Italy and then file an income tax return and all that kind of stuff. So we need to look at all of these different requirements. And then sometimes it's not beneficial. Let's say, using the example of a property in Italy, if you have a trust or foundation that owns assets all over the world, maybe you don't want to make this entity known to Italy, and maybe you don't want it to be an Italian taxpayer. So maybe it makes sense to have the trust or foundation own a company that owns the property in Italy, and then that company's registered in Italy and pays the tax in Italy. We don't know. I mean, we have to look at all of these circumstances when we get into multinational estate planning. And then we have to look at what are your reporting requirements for having set up a trust or foundation in your country's of citizenship and residency, right? Many countries require you to disclose the fact that you have a foreign trust or foundation. And so there might be some tax reporting obligations that are required. What about the beneficiaries? Do the beneficiaries have to do any reporting with respect to their beneficial interest in this trust or foundation? And what kind of reporting is going to be required when they receive a distribution, right? Do they have to do ongoing reporting? Do they only have to do reporting if they receive a distribution? And what does this reporting look like? Now, another question that we need to look at when we're choosing jurisdictions is, are tax treaties going to be beneficial to this structure, right? Because a lot of times, if you're moving, let's say, dividends or interest or income from country A to country B, country A is going to charge a withholding tax on that income when it moves. So let's say your trust or foundation, I'm going to use the UAE as an example, owns a company in Italy, and the trust or foundation is going to get a dividend payment from that company in Italy. Is Italy going to charge a withholding tax? Yes. Well, is there an applicable tax treaty that can reduce that withholding tax? Maybe. And then we have to ask the question of, if a tax treaty exists, how do you qualify for the benefits of that tax treaty? Maybe a trust or foundation doesn't qualify for the treaty benefits. Maybe you have to have the UAE trust or foundation that owns a UAE company that then owns the Italian company, because the UAE company could qualify for treaty benefits, whereas the trust or foundation directly could not. So we also need to look at, like I said, can this structure benefit from tax treaties? And only then can we start looking at, okay, what's the right jurisdiction, right? Because which tax treaties are going to be relevant is going to depend on, again, where the assets are located, and that's going to determine which tax treaties we need to make this structure potentially work. So that's why I said in the very beginning, you can't just say, hey, listen, a trust in this jurisdiction is the end-all be-all. This is what you need for your estate planning and your asset protection. No, it doesn't work that way, right? Because everybody's facts and circumstances are different. First, we have to look at where the different assets are located and the tax consequences of transferring these assets into a trust or foundation. And sometimes transferring an asset in jurisdiction A into a trust or foundation in jurisdiction B might not be that beneficial, but maybe transferring it into a trust or foundation in jurisdiction C is more beneficial. Maybe there's less tax consequences because of a tax treaty or something like that. So again, we first need to look at where the assets are located. What are the tax consequences of putting these assets into a trust or foundation or companies owned by a trust or foundation in different jurisdictions? Then we need to look at what the reporting requirements of those transfers are. We need to look at what the ongoing taxation is going to be once the assets are transferred into the structure. Then we need to look at the tax consequences of the person setting up the structure in their country of citizenship and residency. What are the tax consequences going to be when they transfer these assets into the trust or foundation in their country of residence? What are the reporting obligations? What's the ongoing tax going to look like? What are the ongoing reporting requirements going to look like? And then we have to look at the beneficiaries. What are their reporting requirements going to be with respect to their beneficial interest in this structure? And what are the tax consequences are going to be? Are they going to have to pay ongoing tax? Are they only going to have to pay tax when they get distributions? The fourth thing is looking at whether or not tax treaties are going to be beneficial to this structure. And once we've sort of put that framework together, that model, right, that we know all of this information, then we can start looking at which jurisdictions are going to be most beneficial given this particular set of circumstances. And so that's why whenever you engage in multinational estate planning, you need to engage somebody that really has a good understanding of sort of the lay of the land of all the applicable jurisdictions that you can use for this type of planning, and really go through the process of getting tax advice in every single country where there's an asset located, right? So that means hiring a really good international tax advisor in each one of these countries to determine what the tax consequences are of transferring this asset into a structure, and to have this tax advisor help you optimize the best way to do that to reduce any potential tax burdens. And then you need to hire tax advisors in every single country in which the person that's setting up this structure is a citizen or a resident, to figure out what the tax consequences are of transferring these assets into the structure and how to do that in the most tax efficient manner. And then you have to hire tax advisors in each one of the jurisdictions where there's beneficiaries to get advice on how they're going to be taxed and what their reporting requirements are going to be. And then this lead advisor, let's call it, needs to compile that information to be able to give integrated advice to the client and an integrated strategy and solution of, hey, this is the best way to do this and the most tax efficient way to do this. There's no shortcut around this. If you want to achieve the best results, there's no way that just setting up a trust here or a foundation here is going to be the best answer, right? You need somebody that's going to dig into these details, get the information, and come up with a comprehensive strategy to do it. Multinational estate planning is a really complex area of taxation and estate planning. It's personally, I'm a problem solver. So for me, it's always fun to solve new problems and find new ways. But the point that I wanted to make it in this podcast episode is, if somebody's out there trying to sell trusts or foundations and they're telling you this is the answer to your multinational estate planning needs, it's not. They make their money by selling entities, not giving advice. To do proper multinational estate planning, you need to hire somebody that's going to review all of the things that I just went through in detail and put a comprehensive strategy together for you, because it really is a complex process. I hope this has given you some insight into multinational estate planning. You have a better understanding of what it is and how to go about doing it. And I hope you found this episode informational. See you on the next episode.
Thank you for joining me on Wealth Uncensored, where we help you minimize taxes and protect your wealth for the next generation. If you like our show, be sure to subscribe and leave a review. And if you have any questions or suggestions for future episodes, we'd love to hear from you. You can email us at info@esquiregroup.com. And don't forget to visit Esquire Group's website for more information on how we can help you secure your wealth. I'll be dropping knowledge again next week. Don't forget to join us.